The action in the SPAC market has faded away. In fact, it has come to a literal halt. Just a few weeks ago, we would see that any SPAC that would announce a deal would shoot up 20 to 30%. And as the merger approached, the SPAC price would go even higher, sometimes even doubling. Now all the excitement has faded away, and there are a few reasons for that. The space has definitely gotten crowded. According to SPAC research, there are about 370 blank check companies with $118 billion in capital that are seeking merger targets. This means that many of these SPACs have to settle for less quality companies that do not have any tangible revenue nor launchable products. Usually the SPAC sponsors have 2 years to find a deal, and if they cannot find a deal in that time period, they will have to return the capital to the shareholders. This means that their reputation is at stake. Also, if they cannot find a deal, they incur losses because they have spent money in filing the paperwork. Another reason is that the Security and Exchange Commission has issued guidance that calls that all SPAC warrants be deemed as liabilities for accounting purposes. This directly does not affect the business operations, but the SPACs have to redo their accounting. Currently, there are about 2 or 3 accounting firms specializing in SPAC paperwork. This means that a lot of backup will occur for all the SPACs to refile their paperwork with the SEC if this proposition goes into a law. The real reason is that the SPAC meltdown started with the CCIV Lucid Motors merger. Even before the merger was officially announced, there was extreme hysteria and rumors floating around. The price shot up for CCIV from $14 a share to more than $60 a share. But as soon as the merger was announced after hours, the stock price crashed 50%. Investors who bought the shares could not sell their shares until the next day the market opened, and by that time the price was already cut in half. Usually when the excitement fades away and the public attention gets diverted, that is when we find deals in the stock market. I have analyzed the SPACs and prepared a SPAC selection framework, and these are the 5 ground rules I'm looking to follow. The first is that only select those SPACs for which the merger deal has not been announced. We will be focusing only on the pre-merger SPAC. The sponsors of the SPAC should be reputable individuals or companies. For your information, there were SPACs filed with the name of Do It Again SPAC or Just Another SPAC, and they have raised substantial amount of money in the public market. We look to eliminate all those kind of SPACs. The third criteria is that the stock price should be trading near the net asset value. We are not looking for SPACs which are trading at 10 to 20% premium to their net asset value of $10, but we are rather looking for SPACs which are as close to $10 as possible. The SPAC sponsors should be able to negotiate with reputable companies. This means that they should have the business acumen and the financial backing to make big deals. The fifth and the most important criteria is that we will not hold any SPAC beyond the merger announcement. As soon as the merger is announced, no matter what, sell the SPAC at that point. There is no looking back and no FOMO emotions at that point. Hi, this is Arshad Ahmed, founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes, and please do your due diligence before making any investment decisions. So let's get started. With that framework in mind, here is why I find the BTWN stock at an attractive price point. Bridgetown Holdings, ticker symbol NASDAQ, BTWN, is a special purpose acquisition company that is looking to identify targets that have tremendous business potential. The SPAC is backed by billionaires Richard Lee and Peter Thiel. Richard Lee is the founder of Pacific Century Group. His net worth in 2020 is estimated to be about $4.5 billion. Peter Thiel is the founder of PayPal and an early investor in Facebook. He also founded Palantir Technologies, the big data analytics company. His net worth is estimated to be around $6.5 billion. BTWN's goal is to acquire companies in Southeast Asia. Richard Lee brings powerful connections and business acumen in that market. Peter Thiel has a knack of identifying disruptors early in the cycle before anyone else does. Here we are betting on the jockeys that they will find a great merger target. BTWN has until October 2022 to finalize the merger deal. After that, it has to return the capital back to the shareholders. So there is plenty of time left. Most of the SPACs are looking for deals in the North American market. There is intense competition here. BTWN is looking to acquire target in the Southeast Asia market. Southeast Asia digital economy is expanding at a tremendous rate. It has more than tripled between 2015 and 2019 and is expected to reach $300 billion by 2025 from $100 billion in 2019. Southeast Asians are outpacing even China in the digital economy. Indonesia has the highest e-commerce penetration rate whereas Thailand has the highest mobile banking rate. In Thailand, 74% of the population are accessing banking feature using their mobile phones. Particularly in Indonesia, about 60% of the population is under the age 40. This gives tremendous opportunities to build e-commerce businesses. Southeast Asia's tech ecosystem has produced unicorns like Grab, Gojek, and Tokopedia. These companies have grown tremendously in the markets and have also acquired other small startup firms. The valuation of the companies in that market has yet to reach the levels of US and Europe, so there is a tremendous runway ahead. Rumors surfaced in December 2020 that Tokopedia, the e-commerce giant, would be the merger target for BTWN. However, there was no official confirmation. Later, news articles surfaced that Gojek and Tokopedia are looking for a merger and jointly listing on the Hong Kong and the New York Stock Exchange. So Tokopedia is likely not a target. Again, a few weeks back, Bloomberg cited that Traveloka, the online travel agency, would be a merger target for BTWN. Traveloka is currently valued at $4.5 billion and is backed by the Singapore wealth fund GIC, JD.com and Expedia. Traveloka is also expanding into the fintech and offering credit cards to the customers. The fintech arm alone is valued at $1 billion. Traveloka is also going the Airbnb route of providing experiences and travel lifestyle. BTWN stock price has been trading in the $15 to $17 range just a couple of weeks back. The recent sell-off in Nasdaq due to the rising treasury yields has brought the stock price down. Especially the last week, BTWN stock was trading at $10.10, almost close to the net asset value, and the warrants for BTWN were trading at $2.10. This gives a great entry point in BTWN. If nothing else, you can park your money in BTWN in the stock market and you will have very limited downside risk and a huge upside potential. I think every sector of the stock market is currently overvalued. I think investors are driven by a huge fear in the SPAC market, which has resulted in the cooling down. There was no IPO for the SPAC done in the past 2 weeks. The advantage for BTWN is that they are looking for a merger target outside the United States market and backed by the giants. This gives a huge advantage for BTWN, and I expect that there will be at least a 20% upside from the current price level in a couple of months. I hope you found the video informational. I have analyzed the Coinbase IPO, which you should see here on the end screen. And I hope to see you in that video. Thanks for watching.